Hey, what is going on, guys? I am Sterling the Investor. Welcome back to the channel. And in today's video, we've got some big news. The man, the myth, the legend, Elon Musk has done it yet again. Tesla is entering the S&P 500, and we're going to talk about why this is so significant for the stock. So let's jump into it. So after hours from yesterday, as soon as the news broke, the stock is up about 13, almost 14%, up to $464 per share, which is absolutely crazy. So why is it being added to the S&P 500 so significant? So basically, everyone that has bought Tesla up until this point was people that chose to buy Tesla. You made the conscious decision to go out and purchase Tesla stock yourself. With Tesla being entered into the S&P 500, Tesla will automatically be entered into what's called an index fund. And some of the biggest index funds in the world are S&P 500 index funds. You have VOO from Vanguard, you have the Fidelity S&P 500 index fund, you have IVV from iShares, and so on. So what that means is that every time that someone buys an index fund, you're buying a piece of Tesla. And even more significantly, fund managers are now forced to buy Tesla. So let's say you have a financial advisor, and that financial advisor was traditionally against Tesla. But now that Tesla is in the S&P 500, I'm pretty sure that that financial advisor somewhere has you invested into the S&P 500, probably somewhere in your 401k, whoever's managing that, you're invested in the S&P 500. So just with Tesla being a part of the S&P 500, now everyone that has exposure to this index fund now has exposure to Tesla. So fund managers and institutions are now forced to buy Tesla, which can only make the stock go up in the short term. So when is this happening? December 21st. So it didn't happen yesterday. It's not happening today. It's not happening a week from now. It's officially going to happen December 21st. So why is that significant? So that's significant because it gives the the hype train time to catch steam. So by the time December 21st comes, everyone will be aware that the stock is getting added into the index, and people will have had time to make a decision on whether they want to buy it or not. Fund managers will, it'll start to be introduced into the fund managers products. So you'll see the stock go up. That's what I think in the short term. You'll see it pump well over $500, probably 515, 525, maybe even 540. And then I think after December 21st, you'll see a sharp sell off. You'll see people taking profit, dumping shares, and you'll see the stock in the short term retrace back down to the mid fours to around 450, 470. That's just my thoughts on the stock here in the short term. Of course, you guys know I'm extremely bullish on Tesla. I've been bullish on Tesla for about 2 years now. I started buying in around 229. That's prior to the stock split. So that so not relative to the 464 price now. I started buying at 229 prior to the stock split. So I won't be buying any more individual shares of Tesla just because my cost basis is extremely good right now. And I bought in at a very low price, and I really feel for me to get into the stock now. There's other stocks that have bigger upside for me where I'm at now. For someone that's not into the stock, I still think it's a good opportunity to probably make 50, 60, 70, maybe even 100% on your money. I mean, especially depending on if Tesla starts to transition more into an energy company opposed to a vehicle company. Where I will continue to acquire Tesla is through my retirement account. So I have a retirement account through M1 Finance, and I have 3% of that retirement account right now allocated toward Tesla. It was 5% at one point, it was 4% at another point. I've lowered it down to 3% as the price has risen, and open up that other 1 or 2% for something with a bigger upside. But nonetheless, every time I make a deposit or contribution into that retirement account, 3% of it is going into Tesla. So I will continue to acquire Tesla in that manner until I see a reason to either get rid of that position and have none of my retirement account allocated toward Tesla, or if I, lower it to 1 or 2%. But as of right now, 3% of it every time I make a contribution is going toward Tesla. So I am still extremely confident in Tesla. So I'm definitely still putting my money where my mouth is. I definitely still feel good about it. I feel great about it now that it's in the S&P 500 and institutions will be forced to invest in it. As always, if you guys have any questions, leave them in the comments below. Shoot me a DM on IG at Sterling the Investor, and I'll see you at the top.